Okay, good morning and good afternoon, everybody. Again, thank you for joining the Washington Policy Update. Again, my name is Nathan Dean. Happy belated Mother's Day to any of the moms out there. Hope you had a wonderful weekend. What we're going to do this week is we're going to talk about Congress and then we're going to talk about regulators. And the reason why I want to do this is because now the FAA reauthorization bill, all the hard work was done. It's going to be passed and moved on. And now that the motion vacate has happened and is moved on, you're going to see Congress take somewhat of a pause. The FAA reauthorization was one of the last remaining they call Christmas tree bills, where you try and hang stuff to it, and get to the president's desk. And we saw pretty much no amendments or non-aviation related amendments getting into this thing. And I don't think there's going to be many opportunities going forward for anything like marijuana banking or stable coins or anything like that. But I hate saying this in mid-May, but the year is actually almost over for Congress. And I say that because they're here in June and July. August, they're on recess. September, everybody's going to be dealing with the funding bill and the farm bill. And then October, they're out campaigning. They're not here in Washington. And then you have the election, and we're having the lame duck. So the year is actually somewhat close to being done. I hate to say that, but now you see, now that with the FAA reauthorization, now with the motion vacate is done, you're going to see 2 months of just general congressional activity. So what does that mean? Well, first, you're going to have lots of hearings. When there isn't a lot of legislation being done, Congress loves to have hearings. This week in particular, the House Financial Services Committee and the Senate Banking Committee are going to hold a hearing from the banking regulators. So this is the FDIC, the Office of the Comptroller of the Currency, and the Federal Reserve. Now, what you're going to see in that hearing, I think three things. One, FDIC Chairman Martin Gruenberg is going to have to defend his position. If you're in the financial regulatory space, you may have seen last week that there was a report that came out about the toxicity of the culture over at the FDIC, and you're going to see Republicans en masse call for Chairman Gruenberg to resign. Now, he's not going to. As of right now, he still has the support of the Democrats. And look, if he were to resign, that's the end of any banking regulatory agenda for the rest of the year. So it's going to have to take a lot for Chairman Gruenberg to say that he's going to step down. But fireworks are going to happen. People are going to be asking questions to try and be seen being tough on the regulators and so forth like that. So that's one thing. The other thing I'm looking for is Basel III Endgame. Is it going to be finalized in August? Yes or no? I want Fed Vice Chairman Michael Barr to say something, and I'm hoping he will. And the third thing is just talking about the incentive compensation proposal that came out last week. Now, I call it a proposal because if you actually read it, you'll see that it's written more like an advance notice of proposed rulemaking, and they even state in the press release they're not going to send it to the Federal Register. Now, what that means is it's never going to become official. Until the Fed and the SEC sign on to it, any of this work or any of these headlines you see about banker bonuses, restrictions, or anything like that, it's not going to happen until they put it in the Federal Register, and which to me means it's going to be years later. Now, I know I'm being quick on that one because I talked about it a little bit last week. So if you have any questions on that, but just let me know. I actually recorded a separate video that I could put out and give it to you as well, just talking about the rule in particular. So first, you're going to see hearings. Next, you're going to see legislation. I often get the question, especially from traders up to New York, and they're like, why are people putting out legislation, let's say in October or in September of an election year? Because remember, any legislation that doesn't get passed at the end of a congressional term, so that those 2 years, gets wiped clean and Congress has to start over from scratch. Well, the reason why you put legislation out so far in the year right before an election is two reasons. One, to build awareness. Tell your colleagues, hey, this is something that I'm going to be looking at in the next congressional term. I want you to be aware with it so I can get the ball rolling and start moving things quicker. And secondly, the fundraise. We often see this in the crypto space. And so you'll see crypto legislation coming out, probably, I'm not sure this year, but in the past you've seen it right before the end of the year, before the congressional term, because it's good to fundraise on. Now, the last thing you're going to see are votes. Now, I just was talking about crypto. We actually have a vote coming up in the House. This is for the Financial Innovation and Technology Act. This is Chairman McHenry's crypto market structure bill. This would give the CFTC authority over spot markets. It would also give cryptocurrency platforms like Coinbase a regulatory regime to operate. So the crypto space would really love this. But they've teamed it up with Representative Emmer's anti-central bank digital currency bill. Now, this bill would prevent the Fed from actually moving forward with the central bank digital currency unless authorized by Congress. Now, they've packaged them together. They're going to have a vote. Now, this vote will most likely pass the House. It will die in the Senate. the Democrats, the Senate Democrats, just aren't generally comfortable with the idea of giving crypto a regulatory framework at the moment outside of stablecoins, and B, the CBDC language is just something that I don't think any of the Democrats are going to be supporting. But there is good news here if you're in the crypto space, and that good news is that the stablecoin bill. So there's three bills out there: crypto market structure, CBDCs, and stablecoins. The stablecoin bill was not packaged with the other two. And if you've listened to my calls in the past, you've known that there's been some bipartisan support, bipartisan warmth on this idea of a stablecoin bill. Now, I need to know where the bill text is because, like I said, time is short. So we need to get that agreement. They've been saying that they're getting close to an agreement for a year now. So I'm not sure it's going to come. I'm still at 60% for stablecoins, but any day that there's delaying, that goes down a little bit. But secondly, the fact that they didn't include it in this vote means that they didn't want to upset the negotiations that were going on. Because if the Republicans decided to include the stablecoin into this package of three, a lot of the Democrats would just say, that's it, I'm out, and I'm going to walk home, and we can try crypto again some other day. So you are going to see some votes coming up over the next 2 months, but then that's it. I mean, you really have to then look to September and seeing what can get done there. And with only so much amount of time and Congress, is doing other things, it's just not really looking like it's going to be busy for the rest of the year. Now, for what it's worth, lame duck, just to give you a little bit of idea how I approach lame duck sessions, really the question is it one of those elections where Congress wants to get stuff done, or is it one of those elections, or let me rephrase it this way. If the Republicans win big in November, there's not going to be much of an opportunity to do anything lame duck related because the Republicans are going to say, why should I do something now when I'm going to be in control in, say, 30, 45 days? Now, if President Biden wins in November and Congress is going to be all flipped around, and let's say the Republicans take the Senate and the Democrats take the House and so forth like that, then you could see this maybe this opportunity for retiring senators or retiring congressmen, and there's a decent amount of folks in the House that are retiring this year. I think you could see them saying maybe come together. So it really just depends on the election. So I talked about how it was on the congressional side, and that's going to be pausing a little bit. Things are now going to be heating up on the regulatory side. Now, I talked about the Congressional Review Act last week. The Congressional Review Act, if you weren't here, around August 9th, that's going to be the deadline. Any regulation that is finalized within 60 days, Congress can overturn any regulation within 60 legislative days of it being finalized. And because the legislative days, and depends on how the Senate is in and out and so forth like that, we think that's around August 9th. So any finalized regulation after August 9th, the Republicans could overturn if President Trump wins in November and they take the control of the House and the Senate. So that is this deadline that regulators are working towards. Now there's another deadline, and that is just general holidays. Regulators love to put stuff out right before holidays, right before Memorial Day, 4th of July, August recess, Halloween. If you worked on the Volcker Rule many years ago, you know that right before Thanksgiving, we all got that surprise saying, congrats, the Volcker Rule is out. But there's a lot on the regulatory plate that needs to come out this summer. And this is going to be things like the SEC equity market structure proposal, the CFTC guidance on carbon credits. We've talked about the Basel III endgame, the long-term debt proposal for regional banks. I mean, the list just goes on and on and on. And these are the tier 1 issues. There are tier 2, tier 3 issues. So in order to track this, just remember, SEC likes to put out their notifications on Wednesdays. All the regulators have to put out notifications 7 days in advance that they're going to have a meeting to meet. So you usually get 7 days notice. They usually come on Tuesdays and Wednesdays. So if you're tracking any proposals and you want to know when are they coming out, it's usually Tuesdays and Wednesdays around 6 p.m. Eastern is when those emails come out. It can always change, but it's usually around that time frame. And so that's how you keep in mind. So I think these equity market structure proposals, assuming the SEC has been able to agree on some of the issues that they've been working on, could be ripe for late May or early June. Basel III Endgame, remember they were saying August. Now, the one difference there is the CFPB, the Consumer Financial Protection Bureau. And the reason being is that there is a major court case coming down in the next, it could have come out last week, it can come out any day now, that talks about the CFPB's constitutionality of its funding structure. Because if you remember, the CFPB right now is funded via the Federal Reserve. It's not funded via the appropriations process through Congress. And there was a court case talking about, is this funding mechanism constitutional or not? Now, I don't want to get into, like, my colleague Elliot Stein has some great notes on this. I can send it to you. But if the CFPB comes out and deems that, or if the Supreme Court comes out and deems the CFPB is not constitutional, then we get into the situation of it could run the ramifications. I've heard people say the CFPB just may not exist because it's not going to have any money. I've heard people say that it's just going to be like, okay, great, thanks, we're going to be under appropriations, let's move forward. But the CFPB has really been holding back on their own accord until this court case is decided upon. And once this court case is decided upon, whether assuming that the CFPB still exists, which I do think it will, the CFPB is going to come out of the gate storming, and you're going to see a lot of proposals, a lot of enforcement actions, and so forth. And the CFPB is just going to take the guess or the estimate or the hope that President Biden wins in November so they can begin to finalize things. You're not going to see a lot of proposals from other agencies coming out at the tail end of this year. So I'm going to pause there. If you have any questions, please feel free to reach out to me at ndean10@bloomberg.net. We have a lot of stuff happening over the next few weeks, so I'll just try and keep all of it in there, and I'm trying to keep these calls to around 10 to 11 minutes. But I want to again say thank you very much for attending. I wish you the best of weeks, and thanks again. Take care.